Ladies and gentlemen of the crypto space, we're live on a Monday, October 14th at 11:31 a.m. Okay, someone breathed life into these markets. Thank you, China. Cough, cough. Is that unexpected considering what we knew was going to occur on Saturday? And what we know is further going to occur to keep the system running? They're talking about trillions, trillions. And that's when they say trillions is always the thought in your mind, is it yuan or dollar denominated? So that we'll see how that plays out. But in any regard, they're injecting significant capital into the system. They're remonetizing banks and doing all this fancy shit. And that is driving the value of the dollar up. They are devaluing their currency. And that's having knock-on effects across the region. As you can see in Japan, back up to 149, so on and so forth. So there's strong dollar pressure to the upside. There is strong selling of duration, long dated US debt, 10 years plus, back above 4, which is quite fascinating. Um, so what happens here is exactly what we've said is going to occur. They are attempting to export their deflation. The stronger the doesn't have to devalue because there's all these pressures in the system, meaning they're injecting all this capital. And if that attracts an adequate amount of capital from outside investment, you could actually get a net wash. What does that mean? Look at the United States for the 2010s and the deficit spending that occurred in the 2010s, yet we didn't really have consumer price inflation. Consumer price inflation was negligible. Nobody even thought about it between 2010 and 2020. Okay? Wasn't on anyone's radar. And the reason why is because no matter how much they printed, supply kept up with demand. So the same thing could happen from a currency perspective as well. So that's what we're seeing in the short term. The forward looking or the pressure on the system is an increase in yuan supply as they're trying to shore up their banking and financial infrastructure. But that's causing, well, actually, that makes sense. They're causing a depreciation, or rather, an appreciation of the dollar. Um, but we're seeing some nice strength in Bitcoin back above 66. So I don't think the system has changed structurally. What does that mean? The structural bullishness to crypto comes on dollar weakness because that means foreign currency strength. So I think this is the earliest of innings of how wild things will get. So we're seeing still dollar strength, but that's because China's acting and they have to kick the can, export deflation, export deflation, export deflation, export deflation, until it finally gets back to home to roost, to the US. Eventually, that can kick comes right here, and they got to export the deflation. So that means basically they need to get the currency value down. And we literally have an election in like a month, and everything from a policy standpoint suggests continuation of deglobalization and repatriation of supply chain. And you are not doing that with a dollar at 103. Expensive currency favors import, not export. Everything's deglobalizing. They need a cheap dollar so that we can build out domestic supply chain and manufacturing so we can export again. And that gets employment up, so on and so forth. No, that's not the dollar is not where it needs to be. Well, that's something I talk about over the next 10 years, cheaper dollar. Lower highs, lower lows, give it a decade. And that's basically super cycle narrative from a crypto perspective. Lower highs and lower lows on currency. So we are moving in the opposite direction from a currency or a dollar price that we want to see. Move blew out. That was a complete blowout back up to 123. So powers that be understand this, Treasury understands this. They got to get volatility under control, and there's a good chance they will. Looks like Fed regulators are squirming over reserve liquidity, as we've seen some headlines. So they're going to have to juice the system. And that's exactly what we see playing out from a Bitcoin perspective. $66,000 in the blink of an eye. Everyone was so pessimistic at 59 and change. It's all coming to an end. The meme coin super cycle is upon us because there's nothing else. Desperation is as an extreme, and all of it makes sense. We were rationalizing left and right why Bitcoin's irrelevant and meme coins mean everything because we were trying to explain the behavior of the markets. Um, is that what happens always? The meme coin super cycle, and then you just get the rotation back into, value. That's why Bitcoin dominance did what it did in most of 2024 because we had the meme coin cycle at 2000, the beginning of 24, January ish, and then all that capital ran into BTC.D. So now the question is, where does this meme coin cycle run into? Because it gets sold off. It's the weakest of hands. There's no strong hands in meme coins. It's all whoever capitalizes first. And then the insatiable urge to reallocate capital expeditiously, promptly, says it rotates into something. Okay, so that's where we're at, and we get a little bit of confluence of that in gold because it's up there. So all of this is heading in this direction we've been talking about, to this destination we've been talking about so consistently for so long. Um, okay, Aerodrome is hot. What's more interesting to me, because we're at a buck 47, it takes $1 billion worth of capitalization to get us at 100% APR. It's nice to have exposure, but this is the type of thing that you structure your portfolio properly. Um, you have to have proper position sizes. If you excessively allocate to something that needs significant market capitalization to appreciate percentages, you're going to uh, underperform likely your expectations. So, what I'm looking for promptly is exposure to credit. So, base foreign exchange. This is FX and uh, liquidity financing, but we need credit and derivatives. So, that is maybe even more interesting because the credit from a mainnet perspective and even other L2s, I find credit to be the most tantalizing business in all of crypto, even beyond foreign exchange, because from a foreign exchange perspective, it's a race to zero in fees. Liquidity financing proportional to volume, that's always a good business, no matter where you are, as long as the market is not just bleeding capital left and right. So in that regard, maybe let's look at some data to see where things are. Refresh. So this is exactly why we get this feeling of malaise. Minus 3.18% week over week in volume across the board. Oh, goodness. This is why. There's not much market activity. Let's look at base though. Probably a positive. Okay, base is that's why you see a frenzy. So this is the data that supports exactly what everyone's thinking. This all bleeds over into all markets over time. Arbitrage minus 12. Optimism has been absolutely decimated. Everything's decimated except base. And are you going to be the one to crowd in, or do you acquire a position and have exposure? For what? To the only product in the space? Great. Once you've established an appropriate position size, did you spend all of your capital and not have any more capital for credit or derivatives or dollar liabilities? Because credit is not necessarily dollar liabilities. I wonder if Aave, does Aave have base exposure? Yeah. So they don't have Go. See, what's going on here? What's with the frenzy of financial activity? And we're finding tooling a bit lackluster. What's with that? So DeFi money does say a base deploy, yet we're seeing a bit of an arbitrum deploy, and we clearly see an optimism deploy. Where's the base deploy? So this is that Curve USD fork. By whom is always a good question. We have our speculations, but just CRV-USD from a dollar liability standpoint is a heck of a product wherever it lands, whether it and whoever it lands by. If it lands by core curve team in the form of CRV-USD or money, I am certainly interested because this is the design of the superior a superior dollar from a collateral management standpoint. So, what else is on the radar from a base perspective? We go back to Tapioca once again. Once this thing goes live, it's on all chains. So, that should be quite interesting. Very much look forward to just that. Can we get some credit on base? Can't we let people take Arrow and borrow money? Can't we let them gamble? Which is literally what they're doing. That's what foreign exchange is. It's literally gambling, not investing, it's trading. That's why there's all this volume. So we need to give them the product that they want, which is the leverage, which is the credit. That is so much more interesting than, hoping for another $1 billion worth of capitalization on Aerodrome. You got to remember, people got good deals. 8 cents got a good 20x on the money already, give or take. The earlier ones got 20x on the money. Airdrop folks from Velodrome are sitting on 20x on the money. Those are good numbers. This was a good entry. I know a couple of folks that got in the 40s, but you're literally talking about 300 and change percent. Turn 1,000 into $3,000, but you turn $10,000 into $300,000. All right. There's a difference between either finding a good entry or chasing a narrative and having exposure. There's nothing wrong with chasing and having exposure. This is important. It's about expectations. Your expectation here is to watch this grow to 5 bill market cap. Okay, that's cool. That's not entirely unreasonable. You turn 10,000 into $50,000. That's a nice return. Nothing to complain about. Um, your expectation is to turn 10,000 into $500,000. You're smoking some serious hashish because that uh, that- you're not getting those kinds of multiples right now, right quick. If you have reasonable expectations, they're very much more likely to actually occur. Um, Albeit, every now and then, those far out, the far out ideas do play out, which is why it's important to have exposure, which means you can underperform. So, for instance, if you have 10 grand exposure and the expectation is a $50,000 return, it turns 5x, you get a 5 bill market cap, and you have, well, bear in mind your expectation is 100x. From this market cap, it's going to 100 bill. What's the odds of that occurring? It's all about odds. So we're speculating here. I like to minimize my speculation. I rather find something new and shiny with regard to credit and dollar liabilities than crowd into the only trade that currently exists on base excessively. just don't have the capital right now. I could probably acquire an equivalent position size to Velodrome. The problem is I have such a small head to Velodrome. And Velodrome offers exposure to some theoretically the entire superchain network. So I am confused about the destination of everything. It's a strange thing to try and game theory to try and work out. When the superchain 1.0 comes fully online and you have the seamless cross superchain swaps at the optimism level, they've been saying the Velodrome update is coming and it's ready. And what are they going to do with base? How do you swap between? So base will not be part of the super aerodrome will not be part of the super. So I'm confused about how that's going to work from this presentation or what they're thinking from an architecture standpoint. You just have this one-off velodrome fork, yet velodrome is going to be on every optimistic super chain. Anywho, maybe this shit's just cope that the only market is outperforming is base. Avalanche. Joe owns Avalanche. They've just always owned Avalanche. What is a couple of up and comings? Look at Faro gaining a little bit of market share. They were much lower. Uniswap never had any traction on Avalanche compared to Joe. Well, not much to talk about elsewise in the market other than the base. Everything else is in doldrums. It's boring AF. Let's take a look at stablecoins though, because that is one of the most important inspections, and that is pretty much up and to the right. A little bit of a horizontal accumulation for the last period of time, maybe September, last 2 months, marginal appreciation into August. Let's take a look at USDC, USDT, up to the right, up and to the right. Now the kicker is, where are those dollars? $119 billion. There's only five. Wow. Oh, no, that was Binance Smart Chain. There's only $3.7 billion on base. Where are the dollars? If Tether keeps printing and USDC keeps printing as well, where are the dollars? Well, they're certainly in good part on mainnet. So what is this contrarian presentation here? You got base with a frenzy of financial activity, 17% week over week. The vast majority of dollars existing on mainnet. Arbitrum still notably in the lead from a dollar perspective. Hundreds of millions of dollars. Frankly, Binance Smart Chain still has $5 billion worth of dollars. Solana, 3.569. So base is now leading Solana from a dollar liability standpoint. Positive 0.64% week over week change. Tether dominant on mainnet. That's interesting. Tether dominant on Arbitrum. USDC dominant on base. Coinbase related. It's all Coinbase's activity coming on chain. And that's actually a very interesting notion. From a centralized exchange implementation, they're just going to dump all their shit on chain and become an on chain business, which means they get to deleverage their, the centralized infrastructure and rely predominantly on decentralized infrastructure, or at least smart contracts to perform swaps, exchanges, liquidity management, accounting, probably to a great extent. And that's quite fascinating. I think that's a big pivot that I'm sure they're doing because you get rid of all of that hosting and computational requirement from an Amazon cloud perspective, or choose your cloud hosting provider. Um, Anywho, let's go through some questions. That's the deal. That's the captain's update for the week. Money has been proving interesting from an arbitrum and optimism perspective. I'm finding the rate of return quite appealing. Clearly, the point system is attracting people away from the S money deposits. Um, the points are speculative, whereas a 70% APR on dollars isn't speculative. That's what you're getting. So this with the CRV USD implementation, I'm quite interested, and clearly uh, you put your money where your mouth is to see what the hell's going to play out. I would love to see this on base, and that's exactly what caught my eye probably the most. Get on base with a frenzy like this going on aerodrome. People are going to do weird things. That's what I'd love to see. That'd be a lot of financial activity. And they literally just launched Velo on Optimism. I mean, how much harder is it to launch Arrow on base? It's literally the exact same product, copy of the exact same product. I think this is a foreshadow of what CRVUSD will do. Maybe it's a direct integration, or maybe it's clearly it's a fork, but maybe it's a an alpha level test suite for what Curve can do. I think that makes decent sense. Hmm. Hmm. I mean, clearly it's supportive because if you start pairing it with CRVUSD, that creates a synergistic effect. So I think that is a decent statement to make. Anyhow, that's about that. Again, where's Go on base? I mean, Abe would be just doing that much better, which is doing really well back at a buck 63. Let's look at some structure. 8.5 mil liquidity, decent to look at. That's a lovely chart. Let's zoom out a little bit. Mm, let's go over here. Let's get some technicals, moving averages. Oh, that's a lovely chart. It's right back. There's now the weekly 200 as well. And that's a strong trend reversal. I mean, this has overtones of Bitcoin written all over it. Look at the mean regression to the 10 SMA on the weekly. Then you're back on the weekly, and this is. I would probably correlate the weekly 10 on Aave with the weekly 50 because that has that nice linear incline from a Bitcoin perspective. 65.8. So take a look at this, and then I'll get to comments. I promise. Weakness, 10 SMA. So when markets start to really rally, you start to see support on shorter and shorter moving averages. So weekly 10, look, you went from 40 to 70. You had barely any interaction with the weekly 10. So to start to find some support in the weekly 10, that's kind of what you want to see as a precursor to a significant move in a particular direction. Clearly, this next direction is more so likely to the upside. Support, support, support. About 3 weeks worth of support on the weekly 10, maybe four, and then you diverge, and you didn't touch the weekly 10 for 8 weeks, 2 months, a 2 month frenzy, and people noticed it because um, it didn't touch the damn weekly 10 for 2 months. That's wild. That means it's just up, up, and to the right. I'll give you a little curve insight. We'll go down to the daily. We'll zoom in. That's a hell of a level. I mean, look at that congestion right there. There's no pressure in a particular direction. I mean, you're above a weekly 10, but that thing is just like a metronome at this point. You need to push through the 100 at least. Take a look at the 50, zoom out. 50 is not too convincing, but you get above, it's not even the dailies because look, you got above the daily 100, daily 200 with nice breaks to the upside. You're going to really want to see a longer term moving average. 100, weekly 100, interaction with the weekly 50, 1, 2, 3, 4, 5 times since breakdown in 22. All right, fine. You could get an earlier indication, 45 cents, but it was rejected by the 100 when it breached the 50. A nice breach and a retest above the 100 on the weekly for curve 60 cents. Puts you right about breakout. You want to see a retest and then your higher high, 70 cents. Nice trifecta of bullish confluence indicating finally bottomed. Because you notice if you have this experience, the breakout, the retest, and the higher high, that's not something you had back here. That's not something you've had in years. That would be the first trifecta of bullish confluence, suggesting higher lows and higher highs from a moving average perspective. So that's what to keep an eye on. All right, let's do it. DCA man, good morning. Arrow, good morning. Base flip BSC and volume today? Yes. Well, it's not base. That's the kicker, and that's probably a big takeaway. It's Coinbase. It's not base. It's not like people are choosing to operate solely on base. It's Coinbase's financial activity, and that's meaningful. Um, that's it, period. That's quite meaningful. It doesn't mean it's the only thing, and that's something that's always important. Like, do you crowd into the only trade? No, you have an appropriate position size. You have appropriate exposure. So maybe the most important thing, given this current valuation, is if you don't have exposure, is there something that's ancillary, something that's supportive? What supports credit facilities? Because credit is how people take leverage, and that's how they speculate and use an exchange to gain exposure directionally to Ethereum price appreciation. You take on credit, but then you have to buy the thing that you want along, so on and so forth. Um, is there any perp exchanges on base? Whatever, derivatives. Who's going to be the first to issue credit on base? And do we not already have exposure? Be it Aave, Curve, or DeFi Money. Um, does anyone still have exposure to Abracadabra? Because these are the credit lines. These are the credit facilities that people will leverage. They will leverage as far as they possibly can in the coming months. Gains trade just moved to base as well. FX is on the way. Well, FX is already there. That's what Aerodrome is. Tsunami is building a presence on base. Not much else at the moment. Keep an eye on it because that's the opportunity. Is not what's the only thing to own because the second there's the only thing to own and other things start popping up, that's when you get the capital rotation. Because unless Aerodrome's going to rip 50% to the upside every week, you can have rotation to something that is moving to the upside 50% every week. I mean, we're talking about obviously maximum bullish conditions. So this is why it's important to understand a lack of investment breadth means once new investments come online, you're going to see big rotations of capital. Um, well, we'll keep an eye on it. Oh, FX. FX is on the way. FX protocol. FFX. Okay. Let's take a look at FFX. Uh, am I not getting a chart? That's a good reason. Anywho, where's the liquidity? Why is it not pulling it up? Typical. All right. I'm not going to fight the system. I'm not going to get it there. How are we? 72? Let's go out to a year. I wouldn't mind the chart. Could we get it on Gecko? Gecko Terminal? Live chart. All right, we'll take it on Gecko Terminal. It's not too constructive. I think this is from a yield perspective, the best interpretation. Um, Latin Club. You yourself, Arrow, have said these guys have been pulling in the cash. Remarkable. 54 million deposits with. We're talking about 4.41 mil market cap with 54 million deposits. That's extraordinary. Um, I want base exposure. Have all the credit exposure I need from a mainnet perspective, and indirectly, Aladdin is maybe Cleve is becoming interesting again. Let's take a look at Cleve price. This Cleve just dominates convex governance. 486 sitting at. That's such an interesting talking point. Half a mil. Is that real? Is that real, Arrow? Is that real? Half a mil market cap? What's the supply though? We got to go to curve. Um, we want to go to curve phi. We want to slop. I mean, I guess we could go to see if there's any ancillary supply. Let's go over here. See if we can get any cleave. On Arbitrum, mainnet, cleave. Yeah. And let's say we have, what do I have? Let's have a couple of bucks there. Okay. See, that's nothing to buy. How are you going to grow how is Cleve going to grow its liquidity? It doesn't have liquidity. It's completely liquid. Such catch 22s with all these products. It's literally sitting at half a mil market cap, but it has a max supply of 2 mil. So this is endless equation. You can imagine what the brokerage houses do and the clearing houses for big institutional firms. Liquidity versus available depth because there's a market cap associated with it. How do you grow the market cap of this without incurring massive amounts of slippage in transactions? And this reminds me of exactly what the bond market faces. The bond market, when you see the move indicator blow up, because people are coming in with excessive size, that's slippage basically, and they're moving the price significantly. 118. Anywho, f of x v2 will be amazing. I tend to think that will be the case as well. Moonwell has been doing well, but the well token doesn't do anything at the moment. That's unfortunate. Narrative of Curve at some point was that Curve USD DEX on all chains means Curve gives you exposure to all chains, which clearly hasn't played out. Why will it be different with TAP? It won't necessarily be different or not be different. We have to see what happens upon launch. Still hasn't launched. And That is the conundrum we always find ourselves in with every single asset. Will it live up to expectations or not? And that's why we take exposure, and that's why we have created our portfolios. And we get to see, because the market is sure as hell going to answer that question for you. Sir Joe present. DCA man, S money, APR still rising. Very happy to see that. Yeah, this is fascinating. We'll see what happens because I mean at 70% on I borrowed about 10 chip here with some ETH on optimism. I actually took a long, go figure. I went long ETH, but I mean here, if you go over here, optimism. It took a long because I borrowed USDC. I'm paying 5.5%. I mean 5.5%, and I'm pulling in 68%. It's a positive carry trade and long Ethereum. Uh, my wife did say to take on a little bit more risk. Like, no, we got to take on more risk, dude. And I'm like, all right, fine. Long Ethereum, positive 65% carry trade. Okay, let's see how that plays out. Um, Points have been accumulating, so that's nice. We'll see if that is something. I would love to see this. Two things I would love to see. I would love to see this be an expression of what um, staked STCRVUSD will become, and I would love it to either be very synergistic, like all STCRVUSD, S money, and all of these pairs and incentives, and I would love that kind of richness, and not just like, all right, they're trying to do something small. Like either have a nice collaboration, a richness of a relationship, just don't half-ass it and whatnot. So that'd be nice. And I'd also love to see what the hell is going to happen with Velodrome and Aerodrome. How do you have this one-off? And just because Aerodrome's doing well and Velodrome looks like shit, doesn't mean you shouldn't necessarily figure that out. Because it's kind of like they're over there doing well, and everything in Velodrome's entire stack is stagnant, which is uh, meanwhile home base is Velodrome. So I'd love to see a little bit more of what's going to play out there. One of my largest positions, Velodrome. I guess in hindsight, it was just not early enough for the free base exposure. But you have two big narratives in crypto markets: optimistic superchains and Arbitrum orbits. And from an optimistic superchain perspective, optimistic superchain perspective, Velodrome remains possibly um, possibly one of two of the most interesting exposures because Fractal is also an optimistic superchain, but Velodrome has the cross-chain component that they're in tune with. We'll see what Kingdom comes up with, but that's all one-off. See, there's the difference between the one-offs and the holistic environment. So one-offs means isolated experiences, whereas a holistic environment means something that is there's a synergy and a flow between child protocol deployments. Because Velodrome deployed on Bob or Lisk or Metal or whatever or Mode, same brand, and the brand builds on itself, supports itself, it evolves, matures, it gets richer, reduces. And that's meaningful. And here's your Fractal deploy. What happens with Ra and the Kingdom, and you have your overlapping protocols. And Kingdom's got its new version coming out. So when Kingdom's new version comes out, boom, all of the Kingdom protocols get upgraded. So that's coming. I don't know. It's There's never been a more interesting time to be in these crypto markets. It remains the case. But all your points today and comments are well said. And guess what? All your points, folks, that you've made in comments come from a great deal of experience. So that's important to recognize in what you guys are all individually offering nowadays. The Reverend Nexus, good morning, rationalists. Always a pleasure. Soon, good morning, Cap. Good morning to you as well. Aerofrax isn't planning on expanding footprint on base. I mean, I don't know what the hell they're doing. We could be salty and frustrated that they are not performing well. I don't know. I try and remain neutral when inspecting everything and try and not solely allow price action to define the way I think of a protocol. I wouldn't understand why they'd not deployed or doing something to base. Listen, the only reason that is the talking point is because it's hot from a volume perspective. Is that really a statement that people are thinking? That base is where everything, it's the one chain to rule them all? It's like, but that always comes back to strong dollar. Everyone's investing in the US, and then you get your emerging market cycle, and all the capital flows to India, Brazil, China, because that's what an emerging market cycle is. Capital concentrates until the switch reverses, until the flow reverses, until the opportunity is elsewhere, because excess concentration diminishes returns. And then capital moves from underperformance to outperformance. That is just something always to consider, as there's a frenzy. As- This is obviously so much more important to consider from a meme coin standpoint. Prax isn't planning to expand. I don't know if they're planning to expand on base, but um, I don't know. We shall see, shan't we? Lucian, good morning. The Reverend Nexus, curious about your thoughts on quantum computing. Obviously, a threat to Bitcoin and central bank capital, but likely a few years out. Ethereum will likely be ready before others. Just curious about your thoughts. Um, Depends on the actor and what access to technology they have. I would think that there's a couple of paths to sustainability or survival slash resiliency in case of a significant breach of security in any particular network. I mean, literally got Bitcoin shot 256. So you break shot 256 and Bitcoin just literally is worthless instantaneously because any public key can be reversed into a private key. And if you have a private key, it's gone. It's literally, it evaporates the entire network in 5 seconds. So what you got is a potential resiliency of network collaboration and coordination to change the algorithm. And but that has implications for mining and whatnot. So that means all the miners all that are hard coded with SHA-256, all the hardware out there. So there's some complexities with regard to quantum computing, but that's just a methodology, a method of computing. Just it comes down to the encryption algorithms, and as long as the encryption algorithms remain relevant and functional without um, a security breach or invalidation, better said, then everything continues as normal. Um, Ready before others, 2 years out, like timeline. Nowadays, as I've gotten older, I like to not think about the things that I can't do anything about. I have no capacity to influence quantum computing, the path versus or the destination. I understand there's risks associated with it and what to have exposure to. So maybe in that regard, Ethereum is a little bit more resilient because the participants may be more inclined to promptly respond to a change in code base. So in that regard, maybe it's more mutable, and Bitcoin may be less willing to modify its code base or less capable. As the you might not be able to just swap out a different. Look at all the ASIC infrastructure. That's a fascinating. You can't because that's hardware algorithm execution. You might not be able to respond promptly. I wonder what the security, the Bitcoin security researchers would think about that one. Like if you had to modify to a different Bitcoin mining algorithm, I guess what you come back to the argument that the hash rate collapses because all outstanding SHA-256 ASICs are no longer functional, and you need to modify the algorithm. There's plenty of algorithms, plenty of quantum computing resistant algorithms nowadays, or increasingly resistant algorithms. Um, so would Bitcoin survive a algorithm invalidation? I probably yes, but that would be a hell of a volatile period. Oof, goodness gracious. And clearly it would require consensus, a hard fork to change the code base to accept a different mining algorithm. Food for thought. Intent X is on base. Uh, okay. And now gains as well. What are we looking up? Let's look up a couple of things. What is this Moonwell? 154 mil market cap. It's clear. Oh, is this who we're talking about? Moonwell? Hmm, okay, come on. Are we on base? Ah, euros. Well, so this is like a money market. This is a credit facility, and they are exposed on base. I wonder what. Take a look. Obviously, you still need dollars. Dollars are separate than uh, than a credit, just pure credit. So, well, 91%. That's why the interest rate's at 14.9. I wonder what they're a fork off of, or if they're not. I doubt that though. Um, base, DeFi, Moonwell, compound. Well, I mean, as with the compound token, which is useless as well. Weekly commits, monthly developers. I would love to see more of the code base. I mean, that's weekly commits 22, weekly commits 21. Two devs. Yeah, no interest at all. And yeah, no interest. Is there anything investable here, or is this just a credit facility? Vault, 11%. Well, stake. Well. Well, is there a return? Are we sharing capital or what? Ah, again, shortfall events. It's literally the Aave stability module. It's fucking useless. All right, so there's a credit facility. Certainly not a disintermediated cash flow machine where investors actually receive pro rata portion of protocol revenue. Intent X, never caught my fancy. Um, I, I still think the market is short something that is overwhelmingly investable. Anywho, thanks for pointing those couple of protocols out. I'll keep this up. Maybe, I mean, look again, 10 change percent, uh, or 70%. So where that's really what I want to think through, because I know the overall market is going to just run multiples. Where do I manage the resulting revenue? How do I manage that cash without deploying it? I don't want to deploy it. Look at what Buffett's doing. He's stacking a pile of cash the size of, say, Mount, Mount St. Helens, and then it'll blow up, and he'll buy everything with it. Um, and that's really what I'm thinking about for the next month, 6 months to a year. Just cash, 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 and just let it grow, 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 and keep it as cash because you need the cash to service bills, but you might as well keep it in an account that's growing. So now we're starting to use the crypto markets as investments that produce cash flow, and that cash flow gets stored in accounts for savings, and you're able to spend from that account. And then we'll talk through how convenient it is to potentially deal with a 1 week unstaking period. So maybe it's just a matter of structuring payments like week 3 of the month. You calculate your OPEX requirements for your household, paying food bills, credit cards, and educational expenses for children and whatnot, and you take your money out the week before the 4th week of the month, and that might be a reasonable strategy. I'm very curious, obviously, how this interest rate holds up. There's clearly a lot of chains for them to expand to, very much on super chain, but they also have Arbitrum exposure. So we got Arbitrum orbits, but also super chains. You get the whole network. That could potentially be something very interesting. See what points. We'll see what becomes of points here. Lucian, I completely overlooked DeFi money, and I'm now in the S Money vault and looking to take out some loans and supply liquidity. We'll see what it becomes. We're all late, I think. Yes, not I think. They're in Epoch 37, 3 days per epoch. We're talking about 2, 3 months. Uh, so yes, that is arguably late, but also a little bit tested, a little bit more than just day one trying to figure out what the hell is going on and that kind of risk reward. So maybe this is the right time. Maybe. The captain, hello, captain, 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 hello, captain, captain. Nice to meet you. Lucian Moonwell getting a nice TVL on base as lending protocol, but already moved quite a bit today. Yeah, but it doesn't pay anything, so it's unfortunate. It looks kind of useless to me. It doesn't do anything. You get 10% of the money. I'll get 10% of the. You get 10% of the money on Aave at this point. Just let's take a look. I mean, actually, these crank at 30, 15%. I wonder what the how much the supply side interest is there. I don't know, but I wouldn't want to buy a volatile asset necessarily if you could get 30, 40, 50, 60% on stables. If you go over to Ramsey's, you go over to liquidity, and you go over to USDT. Here's 20%. Got to put in the work for one tick, but you'll have to constantly rebalance. But 12%, probably get about 15% with some aggressive rebalancing. Put in the work, 15% on dollars. If you go over to Aerodrome, let's see, do they even have USDC, USDT? I was looking, well, I can see that recently. I mean, 23%. Well, that's useless. Brett, stablecoin. Uh, Euro USDC, that's interesting because that is a a slippage. There's no that's a stable pair. Same denomination. That's interesting. 28%. There'll be rebalancing involved in all of this. I wouldn't, for ETH USDC, I wouldn't take 20%. You go over to here, it's paying 170% ETH USDC. So this is why it's important to, you could be looking at the most popular protocol there is, but you go over here and you could clearly see ETH USDC, that's BC because that's for base chain, paying about 20%. So that was slipstream deposit. No, that's not. It's the XYZ. All right, but that is a much larger number. And that's also at aggressive, so you could get 68% with a 5% tick spacing. Frankly, I just put it there, 17%. But I wouldn't necessarily want exposure there. I think these are very interesting deployments. If you go to earn USDC money, it's a stable LP, depending on what kind of votes they can earn. And where is it? It's on Curve. And this is on Optimism. Take a look real quick. Optimism, pools. See, there's no incentives. It's weird with incentives. When does incentives come online on Optimism? This is part of the whole evolution of what Curve wanted to do in 24 and 25 with that grant. Is that they want to get the incentives going on all the chains and some massive deploy list. This is huge. That's a huge deploy list. Surprised they don't have a base deploy. Yes, they do. Yes, they do. Anywho, okay. Um, let's keep it going. Brian Morrison's in the house. Hallucian, it's real cap. Yes, indeedy. IMDC, use Moonwell and base for credit. Sure, it's a compound fork. um, Lucian, I think money will be my additional exposure to base in the super chain. That is a reasonable statement. You don't have to cram into the same shit that everyone else is cramming into, so that is quite reasonable. Captain, thoughts on Phantom and upcoming? Oh, which is where to go? Thoughts on Phantom and the upcoming S, Captain. Sonic. Uh, Frenzy. Phantom always experiences a frenzy of activity. Quite excited for that, and I'm hoping Shadow or whatever Kingdom Fork or whatever exposure is offered to me from a Phantom perspective. I I hope it serves well. I keep my anticipation low so that whatever it achieves, I will be satisfied with. Do you still see a bright future for Frax, the project, and FXS, their token? I think it is the most sophisticated protocol in these crypto markets, probably on par, if not comparable. You can have an entire conversation, which is more sophisticated between Tapioca and Frax. Um, and clearly, their price point has been not the beneficiary of their sophistication. Uh, greatest tech is not always the greatest investment. Christian Vel is in audit right now. They go live on all 9 chains. Is Velodrome going to go live on base? So that's, you see that that's weird. Like, how do you fold? How do you keep the Velodrome system? It's going to go live on 9 super chains other than base. So what does that mean from a narrative standpoint? Clearly, it makes sense to keep it isolated, given how successful Airdrome has been. But what are they? Potentially, would they consider doing something? I don't know. I don't. Just something to think about. Yes, that is what I heard as Raul. Hello. Gazika is 4x underwhelming so far. I don't see USDC, EU, EURC getting much traction despite being traded pair in the world. Um, yes, but 4x. 4x is literally Ethereum USDC, Ethereum USDT. Everything is Forex. What what's the difference between a currency and a crypto? I mean, they do call them cryptocurrencies for a reason because they're all kind of the same. It's all related. All this shit is all getting blurred. So that's what these AMMs are. These are foreign exchanges. And even meme coins are a type of currency, a shitty one, even more volatile than anything anyone could ever say is volatile, but still a currency created out of nothing. It's a fiat currency in some regards by definition, backed by full faith and credit in a meme. All these AMMs are foreign exchange. Christian never thought about the hardware infrastructure aspect of the BTC quantum resistant upgrade. Yikes. As the firms list, list, listing this as a risk on the ETF booklet. What do you do with the ASICs if you can't use SHA-256 anymore? Complicated. They say the temporary fix right now for quantum is to move your Bitcoin to a fresh wallet and do any transactions. Then they can't tell your public address. The price will dump regardless. They can tell you because all transactions, if you're sending Bitcoin to a fresh address, there is a transaction entry that gets mined of the destination address where that Bitcoin got sent to. There's a paper trail for all Bitcoin. So, so simple. DCA man, did you know Possum Labs? I think the project is interesting. Curious about your thoughts. Possum Labs. Possum Labs. All right. Market cap that's entertaining. Hmm. Gives me cow swap vibes. Possum pie. I like that. Products. All right. So these are the derivatives products. Derivatives products. Interesting. They're just building it out, I would imagine. Oh no, they have their D app. Arbitrum. There's nothing I could say, DCA man. It looks interesting. I would need to look into the contracts. I would need to look into social media, Discord. I would need to look into, public statements, partnerships, and whatnot. But there's nothing I could take off the top of my head other than their splash, and their splash is interesting. That is a nice initial presentation, not the products part, but if you go back here, I like that. Positive sum finance. So uh, early thoughts are okay. There may be something there. Certainly would need to know a lot more, and that's what I think. Luther, hey Cap, beautiful background image. May I ask which tool you used to create it? Oh, this is all Mid Journey, dude. It's all Mid Journey. That's it, Mid Journey. I, face swap, throw myself on there. Just Mid Journey is wild nowadays. We've been doing these images for quite some time. Arrow. Oh, I'm not salty about Frax at all. I asked, and they said the dev said no, no regarding why wouldn't they go to base? Hmm. I mean, they want everyone to come to Frax though. Huh. Yeah, I'm not really salty about Frax. I own that position since launch, and I am quite fond of it from an understanding what they've built perspective. Best tech isn't always the best investment, meaning the best investment isn't always really what you want. I like that investment that I own, and what becomes of it, I want to see and have skin in the game. What becomes of Frax? So in that regard, I'm quite comfortable. Hope that helps. Lucian, Cap, you'll be happy. I helped onboard my girlfriend the crypto the other day. The first question I asked was, "What are your expectations?" Settled on a cap gains portfolio, Bitcoin, Ethereum, and Arrow 50, 30, 20, sell to dollars. Okay, now you're talking. And that is quite reasonable. Expectations and sell targets. And it's important to understand technicals to a degree, albeit not really right about now. That's more of a lower time frame trading. For instance, it's October 14th. What are the odds that in the next months the portfolio will be twice as much? And he turned 10 grand to 20 grand in the next 3 to 6 months. The high likelihood. And if that's the expectation, if that's the target, you sell it and you doubled your money in 6 months. And that is a reasonable approach to capital management. Setting targets, setting reasonable time frame, and having reasonable expectations. So that is something that is quite good to hear and rare, I might add. Elysian yield from there. She's happy with a few X's, which I believe will be possible with my guidance, and finger on the sell button as we enter irrational exuberance. Yeah, the interesting thing is yield from there. I think there's very interesting yields in the crypto markets. I mean, you were getting 5.5% from banks for a little bit. Now it's down to 5. It should go lower in the short term, but look at all these yield strategies with a little bit of work. Um, you're talking about, I wouldn't do 20. 24 is one tick. That's like you're sitting at the computer all day long and just rebalancing. And you have to also rebalance in a capital efficient way. So you may end up, you need certain amount of size maybe to actually rebalance cross chain depending on availability of capital. But then again, this is Arbitrum. There's plenty of billions of dollars, so you should be able to rebalance relatively easily and achieve at least like between 12 and 24%. Like 50% is quite reasonable. And then whatever comes of this, but there's obviously the increased risk profile with DeFi money. Um, see where it ends up, and it'll probably get diluted over time, but it's paying 68%. That's quite fascinating. And then Velodrome, let's see what the liquidity's like. We want stable. Is there USDC? Let's sort by APR. USDR. I don't even know. It's a increasingly low liquidity chain optimism, whereas Arbitrum has much more liquidity. Go over to stables. I mean, really, a good target for stable management is Arbitrum. If you're going for optimistic super chain, I would think to look at base. Um, look at the Moonwell. Moonwell lending on base. If their stable is offering 10%, But if you go over to Aave on mainnet, 4.64% on USDC. Listen, it adds up. And then you can go to Fractal. So I don't know. I don't know. I don't have the answers, but I am certainly thinking primarily of what the hell do I do with my cash heading into next year? And how do I manage it without taking on risk? Because I need that capital to live, so on and so forth. Hope that helps, my friend. Luther, you're very welcome. Always a pleasure. Let's wrap it up for today. That was a nice conversation, as always. Monday, October 14th at 12:41 p.m. 165 people made it to the end of the stream and are now a little bit more rational because of it. I wish you all a wonderful start of the week. It's only Monday, so I will see you, ladies and gentlemen, again on a Wednesday. Till then.